What is happening, Bulls and Bears? Back with another dose of economic reality. This is our Saturday, August 13th update, 2022 for the U.S. housing market. And yes, as the title says, U.S. housing market decline accelerates. We're going to get into a lot of data today. We're going to talk about inventory, prices, foreclosure forbearance. Yes, there's still over 400,000 people on foreclosure forbearance. We're going to talk about the sales numbers, predictions from quote-unquote experts, and more. Let's get started. Please make sure you like and subscribe so you're up to date on the housing market here. And we're one of the few channels through all of YouTube that called almost the exact timing. We said the second half of 2022 is when we're going to start seeing things decline, and home prices have declined now for the past couple months, month over month. Now we're still up year over year, but things are going to continue to fall out here and get worse as we get into the fall and the winter months. Let's go ahead and get started right here. And let's talk about foreclosures. The number of foreclosure starts. That's when the first public foreclosure notice happens for a particular residence. It's up 219% since the start of the year. So just over 8 months into the year, we're up 219%. That's a big jump, folks. Keep in mind, 100% increase is when something doubles. A 200% increase is tripling. So we have over tripled the number of foreclosures just 8 months into the year 2022. Now we are coming off a couple years of record low foreclosures because of the forbearance programs, the rescue programs. So we are comparing it, when we look at these numbers, comparing it to historically low periods with the health crisis and all the rescue programs. But still, when something triples, that is something to pay attention to, especially just 8 months into the year. Now, speaking of rescue programs, let's talk about that. There's still over 400,000 households on forbearance. That is people that couldn't pay their payments, and the bank had to hold off on foreclosing their homes and give these people more time and give these homeowners, in some cases, readjusting their mortgage, refinancing, things like that. In some cases, actually stretching the mortgage back out a full 30 years. And for those that are surprised or shocked by this, let's go ahead and just bring up the article here real quick. Share of mortgages and forbearance fell to 0.81% at the end of June. This is per the Mortgage Bankers Association. As of the end of June, roughly 405,000 homeowners were in forbearance. 405,000. How much worse would this be if it weren't for that? Well, let's take a look at inventory next, and we'll see what's happening with new homes. All right, folks, we're looking at a 10-year chart here of months of supply of new homes for sale in the United States. And we see that we're at 9.3 months. Let's zoom out to a longer term chart. And we see that we haven't been at this level since about 12 years ago. And that was July 2010. So we're at a 12-year high for new homes on the market. Months of supply at a 12-year high. That is significant. But it could get even worse. We might even surpass the peak as the housing bubble was imploding in 2009. Let's take a look at what might push us even higher with this inventory. Recent article out of Bloomberg, record U.S. homes under construction raise the hope of an inventory boost. So think about that. Let's put these together. We're at a 12-year high for new homes on the market, and we have a record number of U.S. homes under construction. Now, a lot of these homes would have already hit the market if it weren't for the supply shortages. There's garage doors and other materials and construction goods that really delayed a lot of these homes. And if we continue to see the shipping lines open up, expect a lot more of these homes to come on the market and the inventory to rise. And guess what? That's going to put further downward pressure on prices. Combined with the risen mortgage rate environment, we have a interesting show to watch in the housing market. So grab your popcorn. Let's continue onto this report here in the next topic. Folks, this market is so insane that even people like Robert Shiller, for those of you that don't know, Robert Shiller, he basically called the 2008 housing bubble. He's written books before housing bubbles went bust. And if you've heard of the Case-Shiller Home Price Index, he is the co-creator of that index. So he might know a thing or two. And even he says things like maybe, might, possibly. He doesn't know. Even in this interview, A quote from him, Robert Schiller, quote, "We have a lot of ingredients that might lead to a recession." And if you read the article, he's still not sure if there's going to be a big housing market decline or crash or correction, because he knows what could happen. Mortgage rates, they could come in, the money guys can come in and drop rates. They could buy more mortgage-backed securities, which will allow banks to give out easier loans or more loans and loosen their lending. So even Robert Schiller doesn't know for sure, but what we do know here is we're seeing data that points to a downturn and a further downturn as we look ahead, again, with those new homes, those homes under construction coming on the market, record inventory, combined with the 12-year high in new homes inventory. So things are getting very, very interesting. Let's go on to the next topic here. And let's look at the top 10 metropolitan areas where foreclosure filings are on the rise. And it's not the cities that many might expect. We've got Detroit, Michigan, Denver, and that also includes surrounding areas, Nashville, Tennessee, Grand Rapids, Oklahoma City, Tucson, Arizona, Minneapolis, St. Paul, that's Minnesota, San Antonio, Texas, Phoenix, Arizona, and last top 10 here, Philadelphia, Pennsylvania. Now, we talked earlier about price declines. We know that nationally, we're just seeing month-to-month price declines, not down year over year yet. But, and Wolf Street is reporting this, wolfstreet.com, there are some areas that are now down year over year. That means prices right now are lower than what they were last year. That's a year over year price drop. And that, folks, is the Bay Area, San Francisco. Prices are down year over year. Another city that we said that would happen. The cities that saw the biggest bubbles, the biggest price run-ups, are the ones to see prices come down first. So yes, the steepest drop in San Francisco. So if you're waiting to buy, maybe go look in San Francisco, but watch your step on those sidewalks in San Francisco. I'm actually just kidding. Now is not a good time to buy in California. Even with these price declines, we have a long way to go. If things stay where they're at, if mortgage rates stay where they're at, or go even higher, we're going to see more weakness and declines in prices as we head into the fall and winter months. And it's not just the US, even in Canada, Canadian house price correction accelerates. Prices seen falling 25%. Folks, we have housing bubbles globally. We have banks that basically got together, collaborated, and say, hey, we're going to have low mortgage rates for 10 plus years, 12 years when you look at it all the way back. And all these banks did that together with a few exceptions, but most major economies saw record low interest rates over 10 years, and they're all seeing inflation, so they're all pressured to raise rates, including mortgage rates rising. That's why we're seeing housing bubbles bursting. It's completely insane. We've never been this far detached from wages and incomes. We'll have to see what happens. We're going to keep an eye on the housing market here for you. Thanks for watching this report, everybody. Keep stacking and stay prepared for this. Stay on top of the news. I wouldn't say recommendation, what I would urge you to be cautious about is catching a falling knife. When something falls into the price range you've been waiting for several years, especially if you've been waiting on the sidelines, it can be very tempting to jump in and buy as soon as something comes into your price range. But don't over leverage yourself. You don't want to be in a house that's going to make you house poor, or that's going to make you even living paycheck to paycheck in many cases, whereas if you miss a paycheck, you can't make your mortgage payment. You don't want to max yourself out like that. Believe me, it's a stressful situation. I've seen a lot of people. My job is talking to people about their finances, and so many people are in the boat now, worse than I've ever seen. They're in the boat where they're afraid, and that's why we're seeing all these homes come on the market. A lot of people are afraid of what's going to happen with the high cost of living combined with everything else, folks. So be careful, keep stacking, stay prepared. Bye for now, everybody. Peace.